Hello guys, this is Ramya. A very happy Diwali to all. In this video, we'll see about market structure. You can use this strategy on any time frame or on any asset, a top gainer, a loser, intraday swing, or anything. This is a high probability setup. So if you understand this, you will never go back to any other strategy. So let's go. So according to the market structure theory, any market would contain these two things. That is, one is trend and the second one is support and resistance. Here, according to this market structure, any market would contain these three things, that is uptrend, consolidation and a downtrend. Okay, these are the main three things. In an uptrend, the highs will be always higher than the previous high, and in a downtrend, the current low will always be lower than the previous low. Okay, and in consolidation, the price moves within a range. And another concept is any price should move from one level of support and resistance to another level of support and resistance. So the basic strategy would be to enter at the pullback of a trend, and then having the stop loss away from the pullback, and then having the target according to your risk reward ratio. But the main problem with this is the trend is not always perfect. Okay, it is not always in a very clear zigzag pattern. It will be very confusing, so we'll have to understand the structure of a trend and then we'll have to draw it properly. Here this is low and this is high. Okay, this is starting of the trend, so we'll mark it as low and high, and this is the starting of the downtrend, so we'll mark it as high and low. Now what we'll see in an uptrend is, you can see always, so these are all the highs. Okay, we'll write here, and these are all the lows. So we'll mark this now. Okay, so low, 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 low and low, and these are all highs, high, high, high and high. Okay, we have marked these things. So in an uptrend, all these highs should be higher than the previous one, and all these lows should be higher than the previous one. So we'll have to check whether these highs are higher than the previous one. So this one is higher than the previous one, so this is a higher high. Now is this high previous than this one? Yes, so this is also higher high. Is this one higher than the previous one? Yes, so this is also called the higher high. Similarly, we'll draw this lows also. So let's see if this low is higher than this low. Yes, so this is called higher low. Okay, and is this low higher than this low? Yes, so this is also higher low. So this is higher than this one, higher low, so, and this is also higher than this one, so this is called higher low. So these are all higher highs and these are all higher lows. So this is how an uptrend should be formed. Okay, there should be a clear sign of higher highs and higher lows. But drawing this is pretty difficult, but we will manage it. Okay, and similarly for downtrend, so we have marked all these lows and highs. So here you can see these highs will be always lower than the previous one, and these lows all will be lower than the previous ones. So let's start writing this highs and lows. Now let's see if this high lower than this high. Yes, so we'll put this as lower high. Okay, if this high lower than this high, Yes, so this is lower high. Yes, this is lower. This is lower than this one, so lower high. This is lower than this one, so lower high. This is lower than this one, so lower high. So that's how we get this lower high. And now this is the first low, so we'll leave this, and we'll see start with second one. So this low is lower than this low, so we'll mark it as lower low, and this low is lower than this one, so we'll mark this as lower low. Similarly for this, similarly for this and this. So all these lows are lower than the previous ones. So that's how a downtrend should be formed. Okay, this is the basic structure of a trend. If you get this right, you will get almost everything right. So please make sure you learn this and you are able to draw this without confusion, and if you are able to draw it quickly, it will be better for you when you are day trading. If you are finding it very difficult to mark these highs and lows, because sometimes it might be very messy, you will have so many mini trends, so you can always mark highs and lows in numbers, h1 l1 h2 l2 and so on. But also while marking this, we should always make sure that the next highs and lows are still in an uptrend. Okay, so as we don't want any reversals now, so we also don't want h3 to keep going up without any pullbacks, because we don't want any impulse move. So we'll be entering at pullbacks only, so we'll have to make sure l3 is also formed. Okay, it may also go up or it might reverse. So we'll just make sure L3 is formed above H2. So L3 is formed. So the high of the L3 is H3. So H3 is validated. Okay. So if an L3 has a level of support and resistance, this is where you will take an entry. Okay. So let's mark H4 and H4. We'll see whether it has broken H3, this level. Okay, we'll just mark plain H and L now. We'll validate it and then mark it as H4 and L4. Now the next high and low is formed, and low is above H3. Okay, so the high of this low would be H4, and this low is also marked as L4. So always make sure that the next high and low is always above the previous high. Only then you can take an entry at the current pullback. As we know that the price moves from one level of support and resistance to the other level, we can use this as the first level of confirmation. The pullback should be at the level of support and resistance. Only then you can take an entry. But for target, you can either use it according to your risk reward ratio, or fix your target at the next level of support or resistance. So this confirmation will increase your probability of success. Now when a pullback starts to form, just look for a pattern or at least an indicator signal before taking an entry. This would give an extra layer of confirmation. For example, you can say if a bullish candle is formed after the pullback, I will take an entry. Okay, that is one option. Or you can use a moving average to confirm the entry. Another layer of confirmation is to always enter at the beginning of the trend. This is done by trading only on trends after a consolidation breakout. The consolidation can be in any form. It can be in horizontal form or a pattern or anything in range. So whenever you find a breakout like this, this is where you will take an entry, or at least second one. After third or fourth, don't take an entry. First and second is preferable, and third is somewhat okay if you are a risky trader and there is no chance for fourth and fifth. but if it is there, it is bit risky. Okay, so what I do is, whenever a consolidation pattern is formed and then a trend starts, that trend is very very strong, so you can always count on that trend. If you want to find whether it is a pullback or reversal, you can see here like this, it would be consolidating, or it will go down or up or like this. But if it breaks the previous level of pullback, then it is considered as downtrend. If it crosses this level, then it has become a downtrend. Okay, this is another concept. So from here, it is considered as a downtrend. It is already broken here, we consider this. Okay, for example, let's take this chart. An uptrend is formed here. Okay, after higher highs and higher lows. Now here, as it breaks this previous level of pullback, we can say that the uptrend has ended and downtrend has started. And also there is a rejection or a pullback at the start of the downtrend, so that is another layer of confirmation. So we can take an entry here and exit at the next level of support and resistance. Now the downtrend has started, so let's draw some lines. So this is the high, so we'll mark from there low and then again high. So this low is lower than the previous low, so we'll mark this as second highs and lows. But here you should not take an entry because it did not break the previous low. So just mark the high and wait for the low to be broken, and then we can take an entry at the pullback. So that's it. This is the basic of any market structure. All you have to do is mark the trend and look for support and resistance. Add layers of confirmations like pattern or indicator or a range breakout. And to be more safe, always take an entry at the start of the trend and always take an entry at the pullback. So if you want more videos about market structure, please do comment in the comment section below, and like, share and subscribe if you find the video useful. So here you can see these highs will be always lower than the previous one, and these lows all will be these highs will be lower than the previous one, and these lows will be lower than the previous ones. So let's start writing this highs and lows. Now let's see if this high lower than this high. Yes, so we'll put this as lower high. Okay, if this high lower than this high, yes, so this is lower high. If this is lower than this one, so lower high. This is lower than this one, so lower high. This is lower than this one, so lower high. So that's how we get this lower high. And now this is the first low, so we'll leave this, and we'll start with second one. So this low is lower than this low, so we'll mark it as lower low, and this low is lower than this one, so we'll mark this as lower low. Similarly for this, and this. So all these lows are lower than the previous ones. So that's how a downtrend should be formed. Okay, this is the basic structure of a trend. If you get this right, you will get almost everything right. So please make sure you learn this and you are able to draw this without confusion, and if you are able to draw it quickly, it will be better for you when you are day trading. Okay.